Cathie Wood from ARK Invest was on CNBC yesterday, and she mentioned a few interesting points. First, that in her view, Tesla will have more upside surprise than NVIDIA. She also said that Tesla's autonomous driving is the biggest AI project in the world. So today we're going to watch a couple videos of her talking about Tesla and the future of AI. I've got Hans C. Nelson with us today. Hans, welcome.
Thanks for having me, Herbert.
Hans is a mechanical engineer. I've had him on the show several times before, and he did a banger video one time explaining Tesla's full self-driving version 12, so you should take a look at that video. So let's start with a few notes from Cathie Wood. So this is recently on Monday, she was on CNBC, and she said that the shares of NVIDIA, which is trading at $458, look much more expensive than the shares of Tesla, trading at $248. And the reason is she thinks that Tesla's autonomous driving is the biggest AI project in the world. She also said that over the next 5 years, which is their investment horizon, they think that Tesla has significantly more value to offer in the way of upside surprise compared to the chip makers. So that she thinks that many analysts are looking at Tesla as more expensive purchase than NVIDIA. That's because they don't value the autonomous driving. They're not sure about the value of autonomy. But ARK Invest and Wood, they've always been very, very again, high conviction autonomy. They think that it's just around the corner, and it's going to help them build a platform to dominate the nascent autonomous taxi market. So before I show these videos over our CNBC, what's your high level thoughts on all this, Hans?
I think that, one of the things that Cathie Wood and ARK Invest have done a great job of over a number of years is they've really been able to look out deeper into the future. That, like you said, they really look at that 5-year time horizon, and they've been able to get a lot of things about Tesla specifically very correct in their predictions. Now, they haven't been perfect. And there's always, small things that people can nitpick them on. The biggest one just being that, Elon has said that we were going to achieve robo-taxis sooner than we have been. And ARK Invest also believed that they might be able to get there sooner. But other than that, like the battery opportunities, Wright's law, a lot of these things, the size, the speed with which Tesla would be able to scale manufacturing and get to the point where they're delivering as many cars as they're delivering today, a lot of those predictions were very, very close to on the money, if not on the money specifically. And then, some of their even price targets have been hit that people originally claimed were outlandish. And not only were they hit sooner than ARK Invest originally guessed that they would be. And so they have a framework for thinking about the future, which is in the least very powerful and needs to be evaluated. Is it correct in every scenario? Maybe, maybe not. But it is definitely something that we've seen enough long-term predictions that are very hard to make come true to where this is something that needs to be given attention.
Yeah. So you will explain a little bit more about your view of how they structure their ARK Invest, and that, unfortunately it is underwater. So if you invested in ARK Invest, you're not doing well, but they are investing in disruptive technology and they're putting their bet on AI. So let's watch a video here of why she's choosing the kind of portfolio that she has. And then we'll also watch another video where she's talking about Tesla's Elon Musk's basically focus on autonomy.
I look at your largest holdings in your main ARK fund. I see Tesla, Coinbase, Roku, Zoom. I know you've talked about Tesla and AI, NVIDIA and AI, but describe AI's exposure in your portfolio. Where does it help other than Tesla, which you've talked about before, NVIDIA? Look at all these other ones we've got here: Twilio, Roblox, Unity, some of the other ones, Block as well. Speak about it broadly and where it fits in here.
Sure. Most of the stocks in our portfolios are there because we've used an AI lens. Now, we wrote a paper called Investing in Artificial Intelligence, Where Will Equity Value Surface? It's on ark-funds.com. Now, I think many people feel comfortable. They're on the right horses, the mega cap tech companies or the Magnificent Seven, one of which is Tesla. So we clearly agree with that one. We are not sure when it comes to the others. We think that AI is going to be highly disruptive is going to disintermediate some of these platforms, not all of them, and that it may be the worst thing that has happened to a company like Google. Google, if I can go to ChatGPT and just get an answer right away and not be bothered with links and advertisements, I might do that. Well, guess what? Google is responding and now giving me answers. So it could be the best thing that happened to Google. We don't know. All I know is that when there are major changes in platforms, especially user interfaces, now that we're thinking about glasses and other wearables, the winners of the last round in technology typically are not the winners in the next round.
Okay, let's pause them there. Let's say quick thoughts on what you just said there.
Yeah, I have a couple on what she just said there. And then going back to the first segment, I just wanted to wrap up one more extra thing. I do agree with her that I think that Tesla probably has a larger upside potential, moving forward over the next 5 years than NVIDIA does. And the reason being that the market has already assigned the value, like NVIDIA has already won AI, and the market has already priced that in. Whereas the market is uncertain about Tesla's ability to win in AI. And for those of us who believe in Tesla's ability to win in AI, that is not priced into the market yet. And so there is more opportunity there. And I 100% agree with that. I think the core, I've followed ARK for a long time now. I've read not everything that they've ever put out, but I've read a lot. And one of their core investment theses is they build their entire analysis around disruptive innovation. And the point that she made there towards the end, that the winners of the last round of innovation typically are not the winners in the next round. And that is because there is a structural shift that happens when you go from being an innovator and a disruptor to being a winner. And you get taken over by bureaucracy, you get taken over by politics and special interests and communications challenges. And that is a structure that makes continuing to win in a shifting landscape very difficult, because you are not fast enough, you're not nimble enough to be able to respond to challenges and opportunities quickly enough to take advantage of them. And also that those opportunities are typically so small when they begin as to not be meaningful to the bottom line of a large company. And so they get ignored because they're not going to change revenue by even a fraction of a percent, much less a whole percent. But active involvement in those opportunities at those early stages is critical to being able to ride those opportunities as they eventually do come to eclipse the overall earnings power of a company. And so, we've seen this over and over again with companies like Kodak. We've seen this with companies like Blockbuster and Netflix. And this is the dynamic that Cathie Woods runs ARK Invest on top of. And I think that their analysis is oftentimes very, very, very razor sharp and salient. The issue that AI poses right now is that it is a field with significant barriers to entry based on the fact that NVIDIA is such a strong player, and they have defended their position in AI compute so effectively a lot of the AI revolution that exists today is only possible because NVIDIA made it possible. And so it's a very hard space to get into without paying the NVIDIA tax. And the NVIDIA tax is very high. And that does make it a little bit more difficult for these new innovative startup companies that are not super well funded to break in. Now, obviously, we see there's a lot of venture capital investment that is pouring into this field. And it could be that it is able to overcome those challenges. I think we will see some very powerful companies that get born right now. The point of contention that I have for Cathie in her specific picks is that a lot of them don't, even though they weren't winners in the last round, they also don't seem to me to have the culture of innovation and the speed necessary to fully capitalize on these AI plays either. The reason that Tesla is outperforming all those other picks is because they're better. The things that she cares about and recognizes are powerful than the other names. But the way that her fund is structured is that the people that are worse at executing on her vision are the ones who grow in their proportion of the position in the fund over time, and the winners actually get reduced. And so because they're constantly selling down those massive winners, if a venture capital fund continued to sell out of their position of, the Google that they invested in when it was tiny and then at 1000x, if they sold it all the way, they would never, ever, ever see 1000x turn in their investment. And that 1000x is the only thing that saves them from the 999 companies that they invested in that failed and went to zero.
Yeah, right. So notwithstanding the structure of ARK Invest, you pointed out well there that it's an issue. But I do agree with her point that usually, right, so typically you invest in the picks and shovels instead of the miners mining for gold. But in this case, it's AI. I think that the winners of AI is not just going to be one nugget. It's going to be like a mountain of gold. It's going to be dwarf the picks and shovels, which is massive. So both will be very good businesses, but I think Tesla's on its way with autonomy and so forth. Thank you so much, Hans. Please follow him on YouTube and on Twitter and X at Hans C. Nelson. Thanks, Hans.